Today I'm going to share 5 top dividend growth stocks that just raised their payments this week. That includes companies like CASY's General Stores, ticker symbol CASY. That is a surprising great performer in the stock market, which is up over 11% just this week after reporting earnings on Monday, and just announced a 14% dividend increase. This is all brought to you by the official source of dividend news over at dividenddata.com, CK Alpha. If you use my link in the description and pinned comment of the video, you can get 20% off site-wide to all Seeking Alpha products. That includes $60 off of premium plus a 7-day free trial. This will only be available for a limited time, so get it while it lasts. With that said, let's roll the intro and get into the dividend news. My name is Zach, this is Dividend Data, and you should leave a like and subscribe to the channel if you enjoy the video. So first off, we have CASY's General Stores, ticker symbol CASY. They just raised their dividend payment by 14% to 57 cents a share. That is up from their prior dividend of 50 cents per share. That dividend will be payable August 15th for shareholders on record as of August 1st. And as we analyze this stock further in dividenddata.com, it really starts to become impressive with how much this company has grown. As you can see, their earnings per share has really had high growth coming out of the great financial crisis, and it's kept up and even accelerated in recent years. And that has powered the stock price to all-time highs. As we stand today, the stock has a price of $499.53, and based on GAAP earnings per share over the trailing 12 months, they are trading at a P/E ratio of 30. And with this latest dividend increase, they have a forward-looking annual dividend payment of $2.28. That gives them a 0.46% dividend yield at current prices. So yes, this is a low-yield stock, but that's because the stock price performance has been so good. This company is actually a very surprising dividend growth stock. The 10-year compound annual growth rate of the dividend is 10%, and the 3-year CAGR is 14.47%. This is a quarterly dividend that they increase basically every single year. And this latest 14% increase is in line with the prior dividend raises of 16.2% and 13.1%. So yes, this may be a low yield stock, but what you have to realize is this is a very low payout ratio. The current EPS payout ratio is 12.5%, and the current free cash flow payout ratio is 16.9%. And even with the high dividend growth, the company is staying in that very low payout ratio range. In fact, the net income payout ratio has even gone down. So CASY definitely has a high capacity for dividend growth. The company's net income per share has grown at a 10-year compound annual growth rate of 15%, and that's actually gotten higher with a 3-year CAGR of 16.9%. And their growth really jumps off the page when you look at their annual net income per share charted out over time. Since 2010, their earnings per share has basically grown by 6x. This company has also become a free cash flow machine. The 10-year compound annual growth rate of free cash flow per share is 52.82%, although the 3-year CAGR is only 0.67%. But you can see that they actually are reliably generating this high free cash flow now. And whether you're talking about revenue, earnings per share, or free cash flow, the business is growing. Even if you take a look at their balance sheet, their shareholder equity is just growing year after year. Now, it's interesting when we take a look at their annual cash flow statement, you can see their cash from operations really has been a lot of the growth. But this company has had surprisingly high capital expenditures. As an example, this past fiscal year, their cash from operations was $892 million, but they spent $522 million on CapEx. That still gave them $370 million of free cash flow, though, and they have had 4 years in a row above $300 million of free cash flow. And for context, we mentioned that dividend payment is a very low payout ratio. This recent year, they paid out $62 million in dividends. Now, this is a company I've been impressed with for a long time, but I'm going to be honest, I'm not that familiar with their business. And they just reported earnings this Monday, so I'm going to ask the AI analyst over on dividenddata.com to summarize the latest quarter and earnings call for CASY stock. And this source is from real earnings call transcripts and financial documents. They just completed their fiscal year reporting Q4 2025, and diluted earnings per share came in at $2.63, which is up 12.4% year over year. Net income was up 13% year over year, and EBITDA was up 20.1% year over year. In the quarter, they also saw same-store sales growth up 1.7%. So overall, this company is growing year after year on basically every metric. And the reason they have such high capex is due to store expansion. CASY built or acquired 270 stores in the year, including the acquisition of Fikes Wholesale and its 198 CEFCO convenience stores. They also have a loyalty program that has grown to over 9 million members. And this latest 14% dividend increase was their 26th consecutive annual dividend increase. The company gave outlook for fiscal year 2026 with EBITDA growth expected to be between 10 and 12%, and same-store sales growth projected to be 2 to 5% for the year. They are also planning to open at least 80 new stores. So this is a company that is continually expanding. The total return for this stock is fantastic, and it definitely trades at a little more premium of a valuation, but you should probably have it on your watch list. I have added it to my watch list, and I definitely have it on my radar to learn more about. Stock number 2 I'm going to share today is Caterpillar, ticker symbol CAT. They just announced a dividend raise of 7%. That was a $1.51 per share quarterly dividend, which is up from the prior dividend of $1.41, and it gives it a forward-looking yield of 1.67%. And that will be payable for shareholders on August 20th for shareholders on record as of July 21st. This is the iconic industrial company known for their construction equipment, and the stock is a dividend aristocrat with over 25 years of consecutive annual dividend increases. With a current stock price of $363 and GAAP earnings per share over the trailing 12 months of $20.52, the current P/E ratio is 17.7. The current forward-looking annual dividend payment is $5.64, which gives it a 1.55% dividend yield. And as you can see, over the long term, the company has been growing earnings per share, and the stock price has largely followed that trend. However, this is a cyclical business, and it depends a lot on infrastructure spending at any time. You need a lot of construction going on for this business to do well. So as an example, you can see a dip in the early 2000s, then again during the Great Financial Crisis, then again in 2015, followed up by another dip during the pandemic. But over the long term, this company is still dominant in their market and will see long-term growth. This recent 7% dividend increase is in line with the historical growth average. The 10-year compound annual growth rate is 7.2%, and the 3-year CAGR is 8.3%. And the dividend is very sustainable based on their payout ratio. Caterpillar currently has a 30% free cash flow payout ratio and a 24% net income payout ratio. But they do like to keep it rather conservative during these boom times, so that way they can continue paying their dividend throughout all market cycles. If we take a look at the company's latest quarter, their Q1 2025 was down a bit year over year. However, they did say they expect Q2 2025 to be similar to the prior year, and they are expecting a slight tailwind from tariffs and lower operating margins. For the full year 2025, they're anticipating sales to be slightly down compared to 2024, and with margins expected to be within their target range. Now, it should be noted that Caterpillar does have a record backlog of $35 billion in orders, so they are cautiously optimistic moving forward. And with Caterpillar, you could say that this 7% dividend increase is another sign of confidence from management in how the growth will be in the future. Stock number 3 I wanted to share today is Applied Materials, ticker symbol AMAT. They just raised their quarterly dividend by 15% to 46 cents a share. This is up from their prior quarterly dividend of 40 cents a share. This is a semiconductor equipment and software company that has been growing very well. As you can see, their earnings per share are currently at all-time highs. But it is important to take into account that this company has faced a lot of cyclicality. The semiconductor business in general, especially on the hardware and equipment side, faces a lot of boom and bust cycles when it comes to spending. And they really are at the whim of how many fabs are being upgraded or built at any time. But we really have been in one of the biggest boom cycles in a while, and it doesn't seem like that's slowing down really anytime soon. The current share price is $172. The P/E ratio based on earnings per share over the trailing 12 months is 20.55. And with a forward-looking annual dividend of $1.84, the current dividend yield is 1.06%. So again, you may be looking at this and say, oh, that's a low dividend yield, but it is a very low payout ratio with a 16% earnings per share payout ratio and 15.9% free cash flow payout ratio. And this company has had fantastic dividend growth. The 10-year CAGR is 16.49%. The 3-year CAGR is even higher at 24%. And this latest 15% increase is actually a slowdown from their prior dividends. The 2 prior dividend raises were 25% and 23%, and the payout ratio has remained in this very healthy range for a long time. So this dividend is very sustainable and set up for continued high growth. On top of dividends, the company buys back shares on a regular basis, and that's actually been very high in recent years. In 2022, they bought back 4.5% of their shares outstanding, 3.65% in 2023, and 1.3% in 2024. The stock price is actually still off a lot from their all-time high of $254 a share. Stock number 4 I'm going to share today is a very popular one among dividend investors, which is Realty Income, ticker symbol O. And it's popular because it's a monthly dividend stock that has been raising its payment for decades. They just raised their monthly dividend by 0.2%. And you may say that's not a lot, which it's not, but they raise their dividend multiple times a year. This one will be payable on July 15th for shareholders on record as of July 1st. And this company's total return has really not been that good over the past 5 or 10 years. But they've kept growing their dividend payment and earnings and cash flow over that time. As you can see, they just hit a new high in quarterly earnings per share. And yes, the stock price hasn't done well, but you can flip that around and look at the bright side. That has boosted the dividend yield to very high levels. The current starting dividend yield on the stock is 5.58%. And this is a company that pays you a dividend every single month. The 10-year compound annual growth rate for Realty Income is 3.85%, and the 3-year CAGR is 2.82%, so you can probably expect 3% dividend growth annually. And I would not say at all this company is at risk of a dividend cut. As you can see, the free cash flow payout ratio is very much in this 80 to 75% range, and this is a real estate investment and trust, so they're required to pay out the vast majority of their cash flows as dividends. So if you're someone who wants reliable growing dividend income, Realty Income is still Realty Income. And yes, they have trademarked the monthly dividend company. The recent stock price performance has not been good, but since going public in 1994, the company has had a compounded annual total return of 13.6% and a 4.2% compound annual growth rate. They have 660 consecutive monthly dividends and 111 consecutive quarterly increases. And by the way, before I share the 5th stock that raised their dividend this week, I want to mention that we have a special summer sale going on for dividenddata.com. That's the research tool I've been showing throughout the video. On top of helping you find better dividend stocks, you can also track your dividend portfolio and its projected dividend income. And this is really the best all-around tool for dividend investors. And right now is the best time to join. We have our exclusive summer sale active. You can get 50% off membership, and you can lock in that 50% discount for life. There's a 30-day money-back guarantee, so no risk in trying it out. And the tool is designed really to help you find better dividend stocks and then track your progress. And if it helps you find just one better stock, then it way more than pays for itself. The link to get access to the summer sale is in the description and pinned comment of the video. And I made this tool with really everything I want. And I just upgraded our dividend news section on the website. So let's get right back into that. Stock number 5 I'm going to share today is FedEx, ticker symbol FDX. They just raised their quarterly dividend payment by 5.1%. This is up from the prior dividend of $1.38. And it's payable on July 8th for shareholders on record as of June 23rd. And as we take a look at FedEx stock, you can see the price has gone up and down in recent years. This one has been a bit of a roller coaster, but the dividend has not been a roller coaster. This has been a reliable and growing dividend payment. And if we go back to 2022, they actually had an absurdly high dividend increase. That was 53% in 1 year. And since then, they've actually continued dividend increases just under 10% a year. The forward-looking annual dividend payment for FedEx is $5.52, and the current dividend yield is 2.46%. The 10-year dividend CAGR is 21.3%, and the 3-year CAGR is 22.5%. This dividend payment is sustainable based on both free cash flow and net income. The current free cash flow payout ratio is 40%, and the current EPS payout ratio is 29%. The company has also been buying back shares in recent years on top of their dividend. And the stock price is still down quite a bit from their all-time high, giving you that higher 2.46% dividend yield. This is on the historically high end for the company, and it is the second highest yield stock that I shared today. But since we're talking about FedEx, I want to give a shout out to a related company, UPS. They have sold off far more, and although they grow the dividend at a lower rate, the current dividend yield is much higher at 6.48%. So if you're closer to retirement and looking for higher yield dividend income, this may be an interesting option. But the dividend growth really is much less. The most recent dividend increase is 0.61%, and that's 2 years of below 1% in dividend increases. However, similar to FedEx, they had a ridiculous 49% increase in 2022. But UPS has actually been seeing worse performance in recent years compared to FedEx. As you can see, their earnings per share have dipped a little bit, but it seems like it has stabilized and it's on its way to growth. So those are 5 dividend increases this week that you need to know about. If you enjoyed the video, please leave a like, comment, and subscribe to the channel. And if you want to get 50% off in the stock research tool I showed throughout the video, you can with the link in the description and pinned comment. Thanks for watching, and I'll see you in the next one.